Hello, everyone. Welcome. Hi, Teddy. Thanks for being here today.
Thank you for
Welcome
having
back. As you all know, Teddy is a MasterZ alumni, so let's welcome him with open arms. I guess it's 6:01 and we can go ahead and start. As we said before, today we will be learning centralized exchange, decentralized exchanges, and how to transfer tokens on exchanges. So tomorrow we have your third MasterZ Extra. You will find all of the information on MasterZ app, and we will also send you a reminder on the Telegram channel. So keep always a lookout there. So without any further ado, Teddy, I leave the floor to you. Again, welcome and enjoy, everyone.
Thank you very much. Let me share my screen.
All right, so in the meantime that Teddy solved the Zoom issue, I can go ahead and answer anyone's questions. So if you have any questions for MasterZ team, just post it on the chat and I'll answer them in the meantime. So I have a question from Sarmad asking from where we can see our assessment results. So if you go, results are up only for the first test. So the one that you find, you go to the Media Center section on MasterZ app, click on the MasterZ lesson folder, then go ahead and click on the first Europe, Middle East, India folder. There you go to lesson 2, Introduction to Blockchain Part 2, and you can see the assessment test and the answers on the description. So what you can do is go ahead and take a look at the exam again. Don't redo it. It's just for you to keep a track of the questions that you answer. So you can go ahead and check them. The same thing for the test that we released yesterday. You can find the test under lesson 3, Ethereum and smart contracts. And then the link is there already, so you can actually click on it. And next Monday, we will put up the same answers again. We have also sent everyone an email with the answers for the first test. Let me go ahead and read it. Okay, someone said, I missed the first assessment test. Is this so bad? Okay, so remember that for you to get the certification, you need to do 80% of the test. So if you missed one, it's not such a big deal. I mean, it is your responsibility in the sense that this will help you study for the final exam. But again, you need to do at least 80%. Hello, does watching recorded live streaming lessons from the drive count as being present in it? Yeah, so if you watch the lessons on the drive folder, you don't need to rewatch them on MasterZ app. We can control, we can check both things. However, going forward, everyone here has access to the media center in MasterZ app. So please go ahead and use that. The drive folder was just in the beginning, in case you weren't really familiar with the MasterZ app. But going forward, every lesson can be found on MasterZ app in the media center. I need to ask if we have to join this live meeting with the same name that we provided to MasterZ app, or is it not important? What is important is that you always log in with the same email. The name is not as important, but the email is important because we take attendance. So if you watch the lesson in live streaming, like for today, you are here, you don't need to rewatch the lesson on demand. We take attendance. If you weren't live streaming, then you need to watch it on demand. But if you were live streaming, we can take this one as your attendance. So make sure you always use the same email. And the email that you applied to master so we can keep a account of your presence. All right, so lessons for the Italian edition are always at 9:30 a.m. But because this international edition has students from so different parts of the world, then we need to make sure that time zones are not a problem. That is why all of the live streaming session will be probably on the afternoon. We also have to how you say, organized with the speakers. So the speakers are also in different parts of the world. And that's why the date, the times change. However, you can find the lessons in advance. If you didn't receive the email for the first assessment test and you did it, that it's totally okay. We take account of the test. So no worries if you didn't get the email. If you download the lesson and then watch it, it does count as watched. So that's totally a possibility. If you by any chance haven't gotten the access to MasterZ app, it's probably because we're still waiting for you to complete one of the tests. So please do so and we will give you access to the app. But please remember to follow the request to join steps, since without it, we cannot see that you have actually logged in. So we cannot allow access to the app. So make sure that you complete the request to join.
I'm sorry, but I can't. It doesn't work.
Teddy, what we can do is that I can go ahead and share your slides, and
Okay, great.
You can just let me know when to move forward. If that
Okay,
works.
that's great. Yeah.
Did you plan also on sharing something else?
Yeah, I had a live demo in the end.
Uh,
So I can try with my other computer. I have it here. It will take like a couple minutes to turn it on. I think there it will work for sure.
okay.
I don't know if we have time for that.
Maybe we can just go ahead and do the lesson and see with the questions, and then if we have time, you can do the live
Okay.
demo. Or we can also do it that you can record it and then we can just post it for everyone on the app.
Yeah, that's great.
Okay, so I'll go ahead and share the screen with Teddy's slide. I will go ahead and I'm sorry for if I didn't respond to your answers on the chat. We will go back to on Saturday's meeting, so keep your questions and I will answer them on Saturday. Okay. Okay, can everyone see it?
I can see them, so I think that
Okay.
everyone can see them. Yeah, sorry for the delay, guys. So what we're going to do today, you can go to the next slide. Thank you. So this is what we're going to do today. Firstly, I'm going to explain you what an exchange is, very general. Then we're going to deep dive in what centralized exchange are and what are decentralized exchange. Then we're going to go over the main differences between the two. And if we have time, we're going to do the live demo altogether to show you how to transfer tokens from a centralized exchange to a decentralized exchange and how to use both of them. Yeah, we can go to the next one. Thank you. So what is an exchange? In general, when we talk about an exchange, we talk about an online platform on which you can do mainly two things. As we can see on the left, we can buy and sell cryptocurrencies. So we can, for example, deposit assets like this. We call these different pairs. And of course, we assets, but also between two crypto assets. So in this case, we have, like, for example, a USD BTC pair, which means dollars and Bitcoin. Or we could have also Ethereum BTC pair. So we can buy and sell between those pairs. I want to make I want to say that when we use like dollars or euros in a platform, in an exchange, we call that fiat money. And what is fiat money is basically fiat money that was issued by a government. What we can do also on an exchange, since an exchange is not like a closed platform, it communicates first of all with the blockchains, and also it can communicate with banks. We can also, let's say, deposit and withdraw assets. So for example, if it's a centralized exchange, we can deposit our money and buy cryptocurrencies with it. Or if we bought some cryptocurrencies, we can withdraw them to our addresses. And so we can yes, deposit and withdraw assets from it. We can go to the second slide and deep dive on what's a centralized exchange. So as I said before, it's a platform where we can buy or sell cryptocurrencies. But in this case, when it's centralized, it's basically run by a private company. Here I've written the three biggest names today of exchanges. We have Binance, FTX, and Coinbase. And as I said, they're run by a private company. So they have like offices around the world and everything. And they have like a team that is paid, that works on making everything going on smoothly. When users want to interact with centralized exchanges, first of all, they have to register, of course, on the exchange. And if we are talking about centralized exchange, we have to go through what is known as KYC, which means know your customer. So basically, if you want to register on Binance, let's say, you have to give them your personal information, so your ID, so they can make sure you're a legit person, and so they're not anonymous. Let's go on and explain how. No, we can stay on the same. Yeah, thank you. And explain how a centralized exchange works, because as we said, we can buy and sell cryptocurrencies or things like that. So first of all, on the left side, we have buyers. As you can see, there is a little man with money in his hand. He has cash. And on the right side, we have sellers who want to sell Bitcoin. Now we have to make this exchange possible. So the first thing that happens is that the person on the left can say, I'm here on Binance, let's say, because I want to buy one Bitcoin at $100. So when the buyer, in this case, puts this order on the centralized exchange, it's put on what's called an order book. So an order book contains all the orders between sellers and buyers. How can the exchange happen? So when on the other side, there is a seller which is willing to sell one Bitcoin, let's say at $1, the exchange can happen. And so the Bitcoin can go to the buyer and the seller can get the money. Of course, this process is not free, because centralized exchanges are here to make money. And so they ask for both the seller and the buyer a small fee, which goes to the exchange as a profit. So if the seller spends, the buyer spends $100, he won't get that whole amount, that whole sum of money in Bitcoin, but part of that will go to the centralized exchange. And so let's say he will get $99 worth of Bitcoin. And the same thing happens also for the seller. He won't sell like his whole Bitcoin, because part of it goes to the fees of the exchange. Yeah, we can go on the next one. So we have talked about centralized exchanges that are run by a company, a normal company as we know them. Decentralized exchange, on the other hand, are platforms that are run by a smart contract on a specific blockchain. So I think you're kind of familiar of what a smart contract is. and what a blockchain is. I hope so, and I won't go over them. But you know that a smart contract is like the centralized way to run things, let's say. So for example, here you can see three names of the three biggest decentralized exchanges we have today. And as you can see, they have pretty funny names. So these are not companies, as we said before, but are smart contracts run on a blockchain. For example, Uniswap runs on Ethereum. And what you can do when a smart contract runs on a specific blockchain is that you can trade only tokens that are compatible with that blockchain. So if, for example, you have an decentralized exchange that runs on Ethereum, you cannot communicate, let's say, with another decentralized exchange that runs on another blockchain, let's say Polygon. Decentralized exchanges work a little bit different than a centralized one because they don't have an order book. So people don't go there and place their orders on this order book, but they go by a different method, let's say, and they have what we call liquidity pools. So I'm going to try to explain you this concept because it can be tricky the first time you hear it. So as you can see, we have a liquidity pool in the center and on the left, a liquidity provider. A liquidity pool, it's simply, let's say, a big container that contains only two cryptocurrencies. So in this case, we have Bitcoin and Ethereum. This pool has been it's empty in the beginning, so people have to like fill it in, let's say, and that's when the liquidity providers steps in. And first thing he does is put in this liquidity pool some assets. So at the first day that the liquidity pool starts, he puts, let's say, $100 in Ethereum and $100 in Bitcoins. So this liquidity pool is filled in the first day. Now we can see that on the right side, we have our first buyer that comes in our decentralized exchange and wants to exchange his Bitcoin for Ethereum. So what he does is simply he exchanges his Bitcoin for Ethereum on the decentralized exchange, and he adds one Bitcoin to the liquidity pool, let's say, and he takes out the equivalent amount in value of Ethereum. So there is basically an exchange inside this pool. Of course, also here, this process is not free, and we have fees also here, but this time the fees go directly to the liquidity provider and not to the exchange. So as we can see here in the centralized exchanges, every aspect of the trade, let's say, it's run by people because the liquidity provider is a normal person that decides to put its assets inside the liquidity pool, and the buyer doesn't need, for example, to register on the sign up on the centralized exchange because it's anonymous. But we will see that later. So to wrap things up and explain it one more time, the liquidity pool in the beginning it's empty. The liquidity providers come in and put inside the liquidity pool tokens. Usually the first time they put 50% of one token and 50% of the other token. And so this is the first day, let's say. When the first buyer comes in, he makes an exchange. So he puts his Bitcoin, let's say, in the pool, and he takes out Ethereum. So it makes an exchange. And in this process, we take out a fee that goes to the liquidity provider. Let's say that the next buyer wants this time to exchange his Ethereum for Bitcoin. He can do that, of course. And as you can probably see, we can have problems with this kind of method because, for example, if a lot of people want to exchange Bitcoin for Ethereum, we're gonna have at the end of the day, let's say, zero Ethereum because everyone took out the Ethereum inside. But exchanges usually have like algorithms that prevent this. But since they're kind of complicated, I'm not going to explain them to you. But usually when one of the two assets become really scarce, let's say, because there is less of it, of course the prices increases, so the people are not incentivized to buy it. We can go on the next slide. Yeah, we talked so about centralized exchanges and decentralized exchanges, and we're gonna go ahead and explain the main differences between them. So, centralized exchanges, of course, are easier to use and hence more popular because it's really easy. You just go to binance.com, for example, you sign up, you give your info, and you're ready to go. You can buy and sell cryptos, and you don't need a lot of knowledge about it. You can be like, let's say, a new guy in the industry and start trading and buying Bitcoin without any problem. On the other hand, if you want to use a decentralized exchange, you need to study a little bit first. So some specific knowledge is required, and this makes them less popular. So if I'm not wrong, 95% of the volume of trading cryptocurrencies is made on centralized exchange and only 5% on decentralized exchange. Something you have to study to use decentralized exchanges is, as you can see, MetaMask. So you need to know how to open a wallet, how to interact with this wallet with smart contracts online. It's not difficult. You can learn it really easily, and we can see it together later on. I will show you how to interact with Uniswap. The next difference between centralized and decentralized is that centralized exchanges are faster because, of course, the decentralized exchange runs on a blockchain, so it needs time to settle the transactions. Every time you buy a token or you exchange a token, you need to run the transaction through a blockchain. So as you know, we have some time before that transaction is put inside a block and it's made official. Instead, on a centralized exchange, this doesn't happen because it's run on a normal server. So every time you buy some cryptocurrencies is more or less instant. And you have your cryptocurrencies in your account inside the centralized exchange instantly. As I said before, on the centralized exchanges, as we go on, we can see the next difference is that centralized exchanges are regulated. So they are companies, of course, so they have to follow rules and laws. So for example, if centralized exchange want to sell assets in a certain country, they have to get permission from that country and they have to abide the law. And so they ask every customer to identify themselves, as I said before. So you have to give your ID and they have your personal information. So you cannot do any illegal stuff in there because you have to follow their rules, of course. And this is one aspect. Instead, decentralized exchanges, they are unregulated and anonymous. Yet we don't have like laws that regulate this kind of exchanges. And so everyone with just a wallet they can create on MetaMask, they can interact with a decentralized exchange. So they don't need to give the exchange any personal information, no emails, anything. You just go there and interact through the wallet. Another difference we have between centralized and decentralized is that in the centralized exchange, the control lies in the hand of the platform. What does it mean? Well, first of all, the exchange is controlled by a group of people, which are the managers, let's say. So every change in the code of the exchange is run through them. They decide everything, and the users, let's say, don't have any voice in this process, so they cannot change the platform at their will. And also, what does it mean that they control the platform is that the tokens inside a centralized exchange are not really in your hand. Let me explain this better. Every time you buy, let's say, Bitcoin on a centralized exchange, you put your money in, you buy the Bitcoin, and on your profile, you can see you have, let's say, 1 Bitcoin because you just bought it. But in reality, the control of the wallet and everything is in the hands of the centralized exchange. So physically, the Bitcoin is still in their hands. If you want to take charge of this part, you have to open a private wallet. So you get the keys, you control them, and you can, like, of course, withdraw this Bitcoin to your personal wallet, and so you can, let's say, escape this environment of the centralized exchange and get on your own. Once you get on your own, of course, you can now go on the decentralized exchange and use it if you want. And in this case, as you can see, I've written that users in decentralized exchanges hold control of the exchange. First, because you have total control of your wallet. So if you lose, let's say, the keys, it's your own fault, and you cannot ask for anyone for help. Instead, on a centralized exchange, if you lose your password, let's say, you can somehow get back in with your documents. But in a decentralized exchange, once you lost your keys to your wallet, it's over. No one can really help you because that's how things work. And another way on how users control the exchange is that usually these exchanges are open source. What does it mean? That the code that someone has written, it's open to everyone. So everyone can see the code, copy it, and make their own exchange, for example. And that's what happened a lot of times in the past, where people took one exchange from one blockchain, copied the code, and took it on another exchange. So they do what it's called forking. And also, the code of the smart contract cannot change, of course, as you know. Once a smart contract is written, it's set in stone, let's say. But what can exchanges do is like vote to make a new version of the exchange. That's what happened, for example, for Uniswap. Now we are at version 3, which means we had two previous versions, and the changes we have today on the version 3 are were decided, let's say, by the community, because people who hold tokens of the exchange can vote and decide what are the future features are going to be. So that's also another aspect of these exchanges, that decentralized exchanges usually want people to be involved in the community. So on Uniswap, for example, you can buy their token, and you can like have a voting power inside this mechanism I just explained to you. Well, another example, let's go on. It's about fees. So decentralized exchanges, since they run on smart contracts and they cut the middleman, let's say, they tend to have lower fees because, as you have seen before, the fees doesn't go to the exchange or to the banks or anything of that, but goes directly to the liquidity provider. So they're usually lower. Instead, the centralized exchange have slightly higher fees because they have higher costs, I assume, and so they want also to make a profit, and so that's why fees are higher. And lastly, as the last difference, is about the how you can interact, let's say, with exchanges. On a centralized exchange, you can, as I said before, deposit your fiat money. So you can deposit your dollars, your euros, because the exchange has a bank that is the middleman, let's say, between you and them. So they make sure that your money goes in without a problem. And this, of course, doesn't happen with a decentralized exchange. Since they are anonymous and they're a smart contract, they cannot interact with banks. So you may ask, how do I put my money in a decentralized exchange? You really can't put fiat money, but what you can do is go on a centralized exchange, buy some cryptocurrencies, and then transfer them to MetaMask and then interact with the decentralized exchange. And that's exactly what I want to show you right now. So I think that if you give me a couple of minutes, I will get my other computer, turn it on, and show you the process. Because yeah, you can go on the next slide. What I'm gonna do is, like, as you can see, go on a centralized exchange, which is FTX. I have some dollars in it. We're gonna buy some Ethereum, and we're gonna send it to MetaMask on my private wallet. And then we're gonna use MetaMask to interact with the centralized exchange, which is on Uniswap. And I'm gonna show you there how it works. And you can buy with your Ethereum a lot of tokens there. So I will be right back. see you soon.
Okay, I guess I can go ahead and continue answering everyone's question regarding MasterZ app. Terry will be right back, and hopefully he can go ahead and share his screen so he can show you the live demo. So I already answered some of you on the chat, but I will go over again in case someone else has the same question. So no worries if you have entered one of the live streaming session with a different name or with the meeting ID. The important thing is that you have the same email. Of course, then we also check in case someone has entered with different emails. However, it's just to make sure that everyone gets the correct attendance. Please make sure that you always use the same email address. Let's see. So you can go ahead, and if you download the lesson from MasterZ app and watch it, that counts with the attendance. So we can we have a way to determine if you saw the lesson or not. So that's fine. So how can you track the percentage of the accomplished test? So like, just make sure you do them. I mean, it's not, the important thing is that you complete them. As you see, it is an assessment test. It's not graded. It is a way for you to understand, see if you understood the lesson, and a way for you to help you study for the final exam. So make sure you do them. You know, the 80% of the total, just I guess you can do the math. But again, if you miss one, it's not such a big deal. However, you need to complete the 80% of them to obtain the final certification. Let's see. Okay, is there a possibility to receive the answers of the assessment test? I would have to ask our back office team. I'm not the one that handles these sort of things. However, I will just please send an email to hello@masterzblockchain.com. And I will also take the question back to the team and see what we can do about that. All right, so how can I receive class notification? So make sure that you are always on the Telegram channel. We also usually post important information, next appointments, reminders, the links to access the class. Even though they are available on MasterZ app, we want you to have them at close range. So we also always keep a lookout on the Telegram channel. Let's see, I always watch the lesson after a few days. Like if it's uploaded today, I go watch it after 5 or 6 days. Does it count as I did watch it? Yes. The lessons on demand are for you to watch, let's say, when you have time. Of course, don't leave all of the lessons for the last day of class, because then usually MasterZ is structure where you first have the basics, then comes the blockchain protocols, and then at the end we have the use cases. So for you to better understand the future lessons, you need to be caught up on the previous one. So if you watch it, it is awesome if you watch it before the next class, before the next lesson. However, it is not mandatory for you to watch it the same day that is posted. We usually post them for you to watch them on Saturdays because usually people have more time on the weekend. However, just make sure that if you can, watch it before the next class, because you will understand better the next concepts if you already understood the previous ones. Okay. So there is a way that I can add the upcoming sessions to my Google Calendar. So what I can advise you here is that you manually input them through the events of MasterZ app. If you can go ahead on MasterZ app, you will see already all of the sessions for this week. You can take the date and time, and you can add the link and add them to your Google Calendar. I don't believe we have like an automated thing that goes from MasterZ app. So I will advise you to do it manually. Let's see. I see some questions for Terry. He will answer them once he comes back. I do apologize, guys, for this inconvenience. It didn't happen before. Okay, I think Terry's back. Well, I do have a spoiler for you. So after this Saturday, the next couple of lessons will be with the blockchain DLTM protocols. So I hope you are excited. We will post that on MasterZ app soon. So,
I'm back. Just one more minute so I can log in on the centralized exchange.
sure.
Because as I said before, we have like a password and an email because we have to register. We have to sign up on them.
Okay, I'll go ahead, keep ahead a bit in answering questions while you're on it, Teddy. Okay, I was ill and couldn't take any classes before. If I start taking classes and complete my assignments from onwards, can I get my certificate? Yes, Mohammed. So just make sure that you watch the lessons and complete the assessment test, and there wouldn't be any problems. Just remember that you need to watch at least 80% of the on-demand lessons and do at least 80% of the assessment tests. So for the attendance, it is something that we do at the end of the lessons. We expect everyone just to keep an idea of how many lessons you watch, since you are the one that knows, and who better to keep track than yourself. So assessment scores, these tests are not graded. As I said before, it is sort of a self-assessment test for you to study the lesson and to keep you up to date for studying for the final exam. So new challenges to get the full access to MasterZ app. Coming soon. I cannot say anything else. So just keep a lookout always on the channels and your email. So can you tell me what time zone are you in? Just write it in chat. I just want to know where everyone is. Okay, we have Switzerland. Dubai, South Africa, Tunisia, Pakistan, India, London. Okay, we have a lot from Pakistan or Italy, Panama, wow. Denmark, Bosnia. We also have a lot of people from Tunisia. So, okay, we have one from Mexico. I think we have people from all over the place. That's it's really cool. Bangladesh, Bangalore in India. Another from Mexico, Portugal. Iran. That's pretty awesome.
Yeah, well, wait, I don't know if anyone has any answer on what I explained so far.
So they're asking where are we from? So MasterZ is based in Milan and Parma in Italy. I'm currently on the office in Parma. Okay, I think, Terry, we have 2 questions that I will go ahead and search while you... All right, one of the questions, Terry, is there a way to buy crypto without KYC?
Well, let me think. I know that there are some sites where you can buy crypto without giving away your information, but usually those sites are not really transparent, let's say, with how they use your bank information. Because of course, if you want to buy cryptocurrencies, you have to use your fiat money, and so you have to use your bank, so they can somehow identify you this way. So there is no way you can buy without the KYC, let's say, because they will know who you are from the bank. What you can do, I know there is a site where you can like set up a meeting with a person and exchange cash for Bitcoin, but I wouldn't say you should do that because it's not really safe. So no, there is no way you can buy like cryptocurrencies legally, let's say, without the KYC.
Okay, we have another question from Sylvain. When you put tokens in liquidity pools, does that mean you don't have any more, or is it just a proposal provision?
Well, when you put your tokens in a liquidity pool, of course, you lock them in the liquidity pool, so you cannot use them while they are in the liquidity pool because they are used for exchange. And as we said before, if you put $100 of Bitcoin and $100 of Ethereum, when you get them out, you're not granted that you will have the same amount, because of course the prices of these assets will change, but also the amount of the assets they change in the liquidity pool. So what the decentralized exchange do is that every time you put assets inside, they give you back a token, and then you can use this token to redeem your money you put in the beginning. But yeah, it's not something really easy to be a liquidity provider. There are a lot of risks because as we've seen, they can be depleted from one side, so you can lose one of the 2 tokens. So yeah, you have to study them a lot and be willing also to, let's say, incur in losses, because it's not a safe bet, say.
Okay, we have, what type of exchange do you recommend? Like, what type do you use personally?
Well, if you are a newbie, like we are here today, I would recommend to use a centralized exchange. What I use personally is Binance.
or also FTX. It's really good. They're good because, as I said, they're easy to use. You just register and you can use them. And also you can find a lot of tutorials online. So if you don't know how to use something, you can search it on Google and you can find everything. And also they have like a help desk. So if you run into an issue, something is not working, you have some people on the other side that can help you. And they have also a really good written documentation. So if you start from zero and if you don't know how exchange works, you can go, for example, on Binance, and they have also an academy where you can find countless articles and will explain everything. You can really become an expert on the subject, but just by reading those articles. They're really well written, and I encourage you to go to their website and see.
Okay. Then we have how liquidity pools work, how the coin price goes up and down.
That's a good question, and I was sure that someone was going to ask me. So depends on the exchange. They have different algorithms to decide what the price is going to be. But let me see, Uniswap. There is a good article on this. How Here we are. Okay, I found the article which explain how the thing works. Let me share my screen. I hope this time it will work.
Awesome.
Okay, I think now you can see my screen, right?
Yes, I just only ask that you close the chat since we have the GDPR with everyone's name.
Oh yeah, privacy. You're
Yes,
right.
exactly.
Well, what I've did is just to go to this website, which is the official website of Uniswap, where they explain everything about the exchange. And so one of the questions in this article, in the glossary, it says, how is the price calculated? And they have like this formula here. So X is the amount of the first token we put in, Y is the second amount, and it has to be constant. So every time one of these two things goes up or down, the other one has to go up and down in the same way. So we have a constant here. I don't think I was really clear in explaining this, but if you have some mathematical experience, you know that to keep this constant at a certain rate that the exchange decides and the developer decide, if let's say X goes up because we have more and more of this token, to keep this constant, the price of this other token has to increase. Well, let me see if they have a better explanation here on protocol overview. Yeah, here they will explain a lot more in detail how those exchanges work. So if you're really curious about it, you can go ahead. But as you can see, they use apparently a really simple formula for the price. Let me open the chat again.
I think we have another question. It says, how dApps developers earn?
Well, it depends on the projects. A lot of time they're open source, so if you write code for an app, you don't get any kind of compensation. sometimes behind these decentralized exchanges, there can be a company, for example. So they develop the smart contracts on their own as a company, and they deploy it in the blockchain. So they can, this way, they can pay their developers some sort of, let's say, some money. But another way they can like reward people on working on project is by giving for free, let's say, the token of the exchange, in hope that one day it will become worth some money and you can sell it in the future. So there is not one certain answer. It depends on the project. But I know that a lot of people work for free on this project because they just like the environment. And yeah, that's it.
Okay, then we have, why does the liquidity pool require 2 tokens initially? Can we not have a single token, say only Ethereum, in the pool to be exchanged for Bitcoin? That way we can switch the payment base when one token currency is empty and the contract is not violated. From Vignesh.
Yeah, let me read that again, Camila. Well, no, we cannot have just one token because, let's say, if we just have Bitcoin, if someone wants to, let's say, sell Ethereum, how are they gonna do it? I mean, there must be an exchange, so we cannot. There can be not an exchange. There cannot be an exchange if we don't have 2 tokens. So I don't really get the question. Maybe you can explain it better. But yeah, in my mind, it's pretty clear. You need to have at least some amount of one of the other token to make it possible. And if you run out of all the tokens, then I think the decentralized exchange can stop that liquidity pool, and you have to start all over again. But that's why decentralized exchanges are developing new ways of managing liquidity pools, because they want to avoid this kind of situation where you deplete one token. And in normal conditions, that shouldn't happen.
Okay, then if you scroll a bit down, we have a question from Kaiser. I'm sorry if I mispronounce your name. It says, suppose a liquidity provider adds $100 worth of Ethereum and $100 worth of other cheap token in the pool. But after some time, the cheap token's price goes down due to some reason. What would happen to the pool then?
Well, the pool still goes on because it's not based on the price. So if you put a token and it was worth a lot of money in the past and today it's worth nearly nothing, that's a risk the liquidity provider has to take on. And that's why I said that becoming a liquidity provider is not that easy, because you have to keep in mind also this kind of situation. And you can make some money, but also lose money because of this situation. Because you will get, of course, money from the fees, but if one of the token goes basically to zero, you lost half of your money you put inside in the beginning.
Okay, then we have how centralized exchanges are transparent, and is there any assurity of maintaining the track record of transfer if they are not on chain?
Well, that's a good question. And let's start by saying that when you go to a centralized exchange, somehow you're trusting the exchange that it's operating in a good manner. We can be assured that the biggest exchanges are doing business legally, because most of the time those kind of exchanges, to get like approval from countries to operate in them, they have to go on audits. So they check that they have all the assets they tell people to have. But it can happen that maybe smaller exchange that doesn't operate in a really good way, it says that it has, for example, 100 Bitcoin and you're trading on the platform, when in reality they don't have it. And usually people find out about this because when you try to when a lot of people try to withdraw Bitcoin, let's say, and they don't have it, they halt the operations, and this is a really bad sign. So to conclude, we can say that if you use a big exchange like Binance, FTX, this doesn't happen. If you use a smaller exchange that nobody has heard about, there could be a risk about what you said, that they are not really safe, let's say, and clear with how they operate.
Perfect. I think, oh, well, it's 7 p.m. We did really good. I don't see any other questions. So you will find the recorded question tomorrow on MasterZ app, again on the media center section. Any other questions regarding anything MasterZ app, just please send us an email and I'll have the back office team answer you. Thank you so much, Teddy, for being here today and for your presentation. We will see you tomorrow, since we do have another MasterZ Extra, Blockchain 101. So it will be you will learn about how to interact with blockchain and Blockchain Explorer. Tomorrow at 6 p.m. Again, just take a look at the Telegram channel tomorrow. We will share the link to join. Again, everyone, thank you so much. Have a great evening and see you tomorrow. Thank you, Teddy.
Thank you, everyone. Bye.
Bye, thank you.